What does this sell-off mean for the markets going forward? Our next guest says there's been a lack of confidence, but he is finding some bright spots. Bruce McCain helps oversee $30 billion at Key Private Bank. He joins us now live from Cleveland this morning. Bruce, thanks for joining us. Where are you finding safety these days?
Well, safety is perhaps at a bit of a premium. I'm not sure that we necessarily look to most of the best opportunities as the most safe investments. For example, we're not overly optimistic about the long-term potential of bonds. But we do think that the economies are working through some of the problems, and then for the longer term, good quality investments in equities should help people get to the financial goals they want to achieve over that longer term.
When you're talking about bonds, I assume you're talking about government debt and the yield being near record lows. But talk to me about what has been a high volume week for corporate credit. You finding opportunities there?
Certainly the corporate bonds have some better opportunities, but again, interest rates all tend to move pretty much in lockstep. So rates from a longer term standpoint, even for corporates, probably don't represent as much security for a long-term investor as it might appear on the surface. It has a place in most portfolios, but we think that those who really will do well over the next 10 to 20 years as they try to achieve their financial goals will inevitably need to look toward equities in a variety of markets, both here and overseas, if they want to get to what they want to achieve.
Now, I know you like the developed markets of Asia, but we're seeing a stronger yen, particularly this week. Doesn't that worry you?
Certainly, you've got to keep a close eye on currencies, but part of the trend that favors the developed markets at this point has been the weakening dollar. When the U.S. currency weakens against those overseas currencies, that does help to boost the price of overseas assets. Certainly, it's not a guarantee that we'll continue to see the dollar weaken, but you've got to keep an eye on that as well as the potential in those markets. If within the Asian markets, certainly Australia and some of the markets that are better levered to the emerging markets phenomenon also represent good opportunity in our view from a longer term standpoint.
Do you just avoid consumer stocks right now, given the concerns we're seeing about lack of confidence on the consumer front, and on a day like this when we're looking at jobless claims increasing?
You certainly have to be careful, but over the last year, consumer discretionary stocks have been among the best performers, and clearly there are opportunities there. Amazon has done extremely well. There are a variety of consumer companies at the company level that have good operating fundamentals and good outlooks. So excluding an entire class of stocks because of problems for consumer spending in general doesn't make any sense in our view.
All right. Well, thank you for giving us some opportunities you're finding right now in today's down markets.